Imagine a business where 93% of the customers lose. You'd probably think, oh, that's a casino, right? But what if I told you there's a $12 billion industry out there that's even more stocked against you, and it's disguised as a legitimate way to make a living? Today, we're going to pull back the curtain on the wild world of prop trading.
And here's why it's worse. In a casino, everybody knows the house has an edge. You walk in knowing the odds are against you. But this industry, it sells itself as a real career path. A ticket to financial freedom. The thing is, when you look under the hood, the mechanics tell a very, very different story.
So, if you spent any time at all on the finance side of TikTok or Instagram, you've definitely seen it. Rented Lamborghinis, kids flashing stacks of cash, screenshots of these just insane profits. This is the world of proprietary or prop trading. And man, does it sell a powerful dream. And let me tell you, that dream is working. Just a few years ago, this was a tiny corner of the finance world. Now, it has absolutely exploded into a massive $12 billion industry. And it's all fueled by convincing young people that they are just one challenge away from living a life of total luxury. But okay, that's the dream. So what happens when we push past all that slick marketing and actually dig into the numbers? Well, the reality is, pretty sobering, to say the least. The sheer scale of failure here is just staggering. A full 93% of traders who try these challenges fail. They make zero profit. That leaves a tiny, tiny 7% who actually succeed. Just let that sink in for a minute. The entire business is built on the fact that almost everyone is going to lose. Okay, so I know what you're thinking. Fine, but I'll be in that 7%. And hey, that's a fair thought. But let's ask another question. For that elite group that does succeed, what kind of money are they actually making? Is it really worth all that stress and risk? And this is the real kicker. Even those top traders, the 7% who actually pass, they earn an average annual return of just 4%. 4. That's not just worse than the S&P 500. It's worse than just buying simple, low-risk U.S. treasuries. You could take on almost zero risk, do nothing, and get a better return. So, who's actually winning here? Right? I mean, if the traders, even the so-called successful ones, aren't making big money, that money has to be going somewhere. And the answer, well, it lies in the pretty brilliant and honestly kind of predatory design of the business model itself. Okay, so here's the playbook. First, you pay a fee for a challenge, and you're never getting that fee back. Second, you start trading on what looks like a real account, but, and this is key, it's actually a completely simulated demo account. Third, and this is what happens 93% of the time, you fail, and the firm just pockets your fee. And fourth, if you actually win, the firm pays out your profit split not from any market genius, but from that giant pool of fees they collected from everybody else who failed. This whole system is built on a statistical concept that basically guarantees the house wins over time. It's called the gambler's ruin principle, and it is the mathematical engine that powers this entire industry. The idea behind it is actually pretty simple. If you have a limited amount of cash and you're playing a game where the odds are even slightly not in your favor, it's a statistical certainty that you will eventually lose everything. Not maybe, not probably. It's inevitable. Roulette is the perfect way to think about this. You bet on black, you've got about a 47% chance to win. The house has a 53% chance. That tiny little edge for the house is what they call a negative expected value. And it means that over time, the casino doesn't need to cheat. They just need you to keep on playing. And here's the cold, hard truth of it all. The math doesn't care how disciplined you are. It doesn't care how good your system feels or how confident you are. When you're playing a game with a negative expected value, whether it's roulette or a prop trading challenge, the math is just relentless. Time is working against you. So when we take this mathematical certainty and apply it back to the prop firm business model, the true nature of what's going on becomes crystal clear. And it really makes you ask a fundamental question. What's your real role in all of this? See, these firms don't make their money by finding the next great trading genius. They don't need skill at all. Their edge comes from pure volume. They just need a massive number of people paying fees and trying the challenges. Because with enough people playing, Gambler's Ruin guarantees they will collect way more in fees than they ever have to pay out. But that brings up an obvious question, right? What about those flashy winners we see all over TikTok and Instagram? If the model is built on failure, why do they even exist?
While they aren't a problem for the firms, they're actually a crucial part of the strategy. These winners are the proof of life. They're basically walking, talking marketing assets that create the illusion of hope. They exist to attract the next wave of hopefuls, whose fees will fund the entire system and pay for the last wave's winners.
And once you see it that way, everything just clicks into place. In the world of retail prop trading, you aren't the customer being served a product. You are the product. You're the input. Your fees are the fuel that keeps this entire machine running. So what's the final takeaway from all this? We've looked at a system that sells a dream, but is literally engineered to profit from failure. It's a game that is designed, from the ground up, for you to lose.
And maybe that's the most powerful lesson here. In a world that's always shouting about complex financial products and promising quick riches, sometimes the smartest, most profitable move you can make is to simply step aside and choose not to play the game at all. And it really leaves you wondering, how many other industries are hiding their true business model in plain sight?